Let's go to Chicago and find out what the trade is talking about there. A lot of firmness in most of the grain trade today, with the exception of the corn. And Scott Gecas joins us now with Walsh Trading. So what are you guys talking about off the air here about this grain market today? What's driving it?
Yeah, so we have the shipments over to China. That was very positive. The beans are getting a little bit of a pushback, but what a lot of people are not talking about is there's 352,000 tons that were canceled to unknown destinations. So there's still a little bit of uncertainty going forward with the bean market. The one thing I do want to point out is just across the board with all the grains, the upside skew in the calls is definitely firming up a little bit. Just on the open, within the first few minutes of the open in the corn market, the 400 calls traded over 1,800 times, closer to 2,000. The open interest on the 400 calls with 22 days left is over 50,000. That's very significant. But if we continue to test that $4 mark and then pull back, I mean, we've been doing this for quite some time, so we have to wait and see for that to break that $4 and get that strong close. If we break that $4 and get a close just above that $4 mark, we can see another 30 to 40 cent rally to the upside. So that's what we're looking at. That's what we're focusing on, just watching the flow and watching those technical levels.
When you look at the option price levels on the soybeans, when you go bracket it out from where we currently are, how do the markets hold up for the premium on those particular option trades? You were talking about the skew on the call side there.
Yeah, so with the bean market and as far as the option flow, the calls are a little bit more active than the puts today. And the calls are holding roughly, if you go 2 or 3 strikes out of the money, they're holding anywhere from $2 to $3 worth of upside premium, meaning that you're going to pay $2 or $3 more for those upside calls rather than the downside puts. So with all the reports coming out, the early estimates with the yields dropping, FC Stone came out and they continue to lower their yield estimates. So everything is going to be focusing on next Friday's report. We're going to be focusing on the flow and position trading ahead of that report. And I will be on next week, Monday and Wednesday, before that report comes out, just to talk about that and go over what the new positions are looking like.
All right, Scott, we'll be back and take a look at our livestock trade as well in just a moment. Scott Gecas is our guest. Don't go anywhere because we'll be right back. So we go back to Scott Gecas in Chicago and get his thoughts on this. Pretty strong action, you have to admit, in this cattle market. And the cash cattle trade has been trading roughly about $2 higher than last week, just pretty much all along here so far this week.
Yeah, one of the big concerns with the cattle market is it's in a completely straight uptrend. Now, the futures are trading at a stiff premium to cash, so some of the traders are looking for that spread to narrow a little bit. But if you look at the overall market, the cutouts are strong, cash is strong. The October 24th exports were roughly just under 16,000 versus the 4-week average of only 2,500. So that just confirms that there's still strong demand for U.S. cattle. And so we're continuing to watch those upside calls being traded. Those upside calls are being active a little bit, but because of that stiff premium to cash, you're also seeing a little action in the put side. Now, moving over to the hog space, I mean, that's a completely different story. The soap opera continues. It's all about the trade war talks, the lack of confirmation of phase 1 being signed. China comes out and says they don't want a long-term deal, so that's also affecting those exports and imports. But the trend continues to remain where it's week on, week off for imports to China. So the imports for China, why you're seeing a little bit of a drop in price, were a little lackluster, a little bit of disappointing. So you're seeing that little bit of a drop off because of that. So, but the calls are still holding upside skew. Going out to the deferreds, the calls are definitely a lot more active than the puts.
Thank you, Scott, for all the information today. Great to visit with you about all that. Scott Gecas, and he is with Walsh Trading right there at the edge of the trading floor in Chicago. John?